Hi, good evening, everyone, and welcome to the 70th episode of Let's Talk About Market. So, if we see the Nifty index today, it was broadly sideways, and this is something that I was talking about since past couple of days. That is because the daily swing was towards the overbought zone, and it has respected those things. Frankly, the daily swing works very well if you want to predict the very short term moves, and this usually turns out to be a great tool for the weekly option traders. But nevertheless, let's see what is happening in the Nifty index, and let's try and understand what are the levels that we need to watch out for to see some trending move. Because since past 2 3 days, I mean the market is literally dead. I mean, it's literally boring to see the market because it is not going anywhere. Yeah, I mean, if there is a gap up, then entire day it is in a range, and it is not doing anything. So in that sense, the market is very dull. Maybe it might be the holiday season that is there right now. But let's try and understand what the structure is, because there are few things that seems to be now weakening a bit. So we'll talk about all those things. Let me quickly share my screen. Uh, yeah, Ajay, if you can just once again confirm if you are able to if you all are able to see my screen, and if you all are able to hear me properly. Okay. Thanks for the confirmation. So let me open the swing as well, because that is what the main highlight is at this point of time. So this is the extreme short term setup that I usually look at. So see, first when we come to the Nifty index, I was talking about this, that maybe we can see some sideways consolidation and so on. So if you see the hourly chart, that is what seemed to be playing out. And the RMI, which was in sell, that has also sort of completed the cycle. Now, ideally, if it holds above this averages and then turns around, and there is a bullish crossover, then it would indicate that the next leg of up move has started. Okay. But if for some reason, the 40-day breaks on the downside and it sustains below that, I mean, the last level where I would want to give benefit of doubt to the bulls would be this point. Okay, which is the gap zone area. So broadly you can say 26,000 on the downside, that will be like a very very important support zone in case the 40-day breaks. But as I mentioned, if the 40-day breaks on the downside, ideally that is some signs of weakness. And if 26,000 breaks on the downside, then I'll be very worried. In fact, then I'll think that there is a risk of probably of a correction to back to this zone, or can it translate into a deeper correction. All those thoughts will start kicking in. So but as of now, I'm not thinking that too far. I just feel that in yesterday's discussion, I did mention to you all that since the RMI is in sell, the swing is at 85 and 90 levels, sort of levels. So there is a possibility that we may see this sideways consolidation, and this consolidation should result into RMI going back to the zero line, which has happened. Now, if there is a bullish crossover from here, and if the averages holds, I'll be thinking of the bullish outcome in the near term. So that is what I'm anticipating at this point of time. Let's see how things unfold. But there are couple of things that you need to keep in mind, and I need to caution you a bit, because the short term indicators are reaching towards those levels. Okay, but I'll tell you what are the exceptions and how do you deal with that. So over here, as you see, that swing has dropped to 78 today. Okay, I mean, there has been a minor downtick over there, but the average swing, because uh, that is a bit more lagging in the I mean, it's a bit lagging because it's an average that we take. So that is why you see it still rising higher. And if you see, the call minus put had gone to the negative yesterday. So, typically when we are seeing these patterns, okay, like you see over here, especially when we are in an uptrend and we end up seeing some patterns like this, then we typically go for a sideways consolidation in the near term. So, is this possible? Yes, it is possible. The way where these high readings don't work is when there is a very strong move. So then what might end up happening is that, you will see the Nifty index rising higher, and in that rising index, what you will see is that initially a weak breath, then again it will do very well, and it will keep staying at higher levels. Okay, and you will see some divergence happening, but in such cases what might end up happening is that the 40 hour may not break and it might keep trending higher. Okay, just for your information and to give you those examples, it was, say, somewhere over here, right? You see what had happened over here. I mean, in this case, when the up move was starting, so right, I mean, few days, we ended up seeing both overbought zones. This had also come to red, and we saw a few days of consolidation, but then it kept rising higher, and there was this negative divergence that kept forming, right? So sometimes these things can also happen, and these things happen generally when the cues are very, very strong. Okay, as of now, it is not that we are getting very strong cues. So that's why, I'm watching those levels very closely, and for me, 26,000 will sort of be the cutoff point. Okay, because if it goes below 26,000, uh, then I'll fear basically that, yeah, this pullback can probably go back towards this, and we'll still be in a range. And then the other important thing that may end up happening, and that's something also that I'm watching very closely, is that I want to see how does the monthly close happen. Since past 2 to 3 sessions that we are discussing, I'm emphasizing this a lot on the monthly close. I just don't want to see a monthly negative close. If that happens, then I'll have to be open to the possibility that we have formed some important high around this level, which is around 26,300 levels. And then until that does not break, the all the risk might open up, and then we'll have to go on a lower time frame and see each day level by level on daily, weekly charts, and so on. Okay, so for all those things, as I told you, 26,000 should be the cutoff point, because then if the 26,000 breaks on the downside, then there will be the risk of 40-day breaking. If 40-day breaks, then there is a risk that can the deeper correction happen, because over here, then all these possibilities will open up. So, see, this is not to scare you or something, but just be open to this idea that if 26,000 breaks, then you have to be open to a correction probably to these levels, and maybe that might end up leading to a retest of breakout or something like that, right? So these are all the possibilities that are there in my head right now. And as I told you, a more decisive breakout point will be a close about 26,300, and I hope that it happens, because if that happens, I am expecting a furious rally, eventually to unfold in the coming weeks and months. But until that does not happen, the markets might end up testing our patience by uh, doing something like this, and those all things are very much possible. So that is why I'm discussing with you, so that you all can keep this in mind and probably position yourself accordingly. The So as I told you, I mean, all the bother points that are coming is from the very, very short term indicators. Okay, so that is the only thing. Otherwise, if you see the medium term setup and all, it is very good. The other one which I saw was that percentage of stock with RMI buy. Okay, that also has come to 84 now. So that is, again, I mean, all these are indicating that maybe in the near term we may end up getting that pause. which is possible. Okay, but in that pause, as I mentioned, 26,000 should not break on the downside, especially for the Nifty index. Okay, if that breaks, then it's then there can be some problem in the near term. Uh, the other point at which I'll be extremely cautious in the short term is when, maybe this. I mean, see, for short term indicators, to predict short term tops. Okay, the indicators that you need to watch from sentiment and diffusion perspective are, so one is call minus put histogram. Okay, then daily swing, daily average swing, then over here percentage of stocks with RMI buy and percentage of stock above 20 SMA. Okay, when all the four comes to the overbought zone, that is like a time that you need to be a little careful. Okay, in fact, if you want to add over here, there is one more that you can add, uh, which is the PCR 9 MA OI. Okay, OIPCR 9 MA. So in this case, basically, histogram is something that we saw that it came to an extreme a couple of days back. When all the six indicators come to an overbought zone, then you have to be a little careful in the short term. As of now, OIPCR and the percentage of stock about 20 SMA, which are the slower ones, those are still indicating that there is up move left. So that's why I'm telling you that there is a benefit of doubt that I'm giving to the bulls, because uh, if those short-term top also have to occur, okay, then ideally you will see those percentage of stocks with about 20 SMA, rising higher towards the upper end of the range. And after that, there is some divergence that are formed, and only then you expect a breakout. A correction. So we are far from that point. So yeah, so that is why the logic is that as long as the this gap zone on the worst case holds on the downside, we are good. We are broadly good on in the near term. That means that possibly we should break out on the upside. But if 26,000 breaks on the downside, then it's a worry. Basically, around, I think, these lows, sorry, this low, or yeah, I think it was around this low where a lot of indicators had come to the oversold zone. This was around, if you see the reading over here, 28. And if I'm not wrong, during the day it had even gone down. Then percentage of stocks with RMI buy, that had gone to oversold. Then if you see those extreme short-term indicators that we have, uh, over here, basically over here, there was this high reading of call minus put. Then all this, basically all these things that we are talking about, those all had come to those oversold zones. Okay, that's why with a lot of confidence I was thinking that somewhere over here a bottom should happen, and that indeed eventually happened. So over here, there are some bit of indicators that are hinting that that there can be some resistance. So that's where frankly, playing this RMI cycle will be very easy way to think when the momentum is going to pick up and when the momentum is going to slow down. Okay, so if we end up seeing something like this, then I would expect that up move should happen, and then in this case especially 26,300 should eventually break. And I feel that once 26,300 breaks, and if we, the worst case is that if we end up getting that weekly close, then we are set for that 29,000 mark, which is very much awaited. Okay, it is awaited since a very, very long time. And I think those things can start playing out. The other positives are that the FI is positioning, they continue to cover. Now the long percentage has risen higher to 12%, but it is still very very low from a historical context. So in that sense, there is a big room that is left on the upside, for them to turn bullish. So yeah, basically these are the positives. Now in terms of sector, bank nifty is very lethargic and not giving a good feeling to me. Okay, over here you see 50% retracement, and it is stuck over there. The other thing is that in fact even PSU Bank has not retraced a lot. Okay, and now in all these cases, RMF come back to the zero line and flattened out. I mean, if the 40-day breaks on the downside, then there is a risk of a correction, because on the weekly chart the RMI has gone in a bearish mode, right? So then the risk will open up that can they correct towards the 20-week average and so on. So I mean, banks especially is a bit of a bother, and within banks, I mean, more so it is the PSU bank which is a bit of a bother. uh, Apart from that, which other index was there? I think other than that we are okay. Oil and gas is something that is not participating that well. But yeah, I mean, now whenever we end up getting the bearish crossover, and if the Nifty index gives a breakdown, then the ones which are giving bearish crossover on the daily charts, those will be the weak link. So be careful from those indices in the short term. Okay, so that is how I think we are placed. Other than that, I don't have much to add. The only hope is that at some point of time, this tight range that we are seeing since past couple of months, I hope this eventually breaks out on the upside. uh, so yeah, that is there. And in the short term, as I mentioned, 26,000 is important level. Sorry that I'm repeating these levels again and again, but these are very very important levels in the very short term, because see, there is something called as Elliott wave that we look at, and that tries to give us a big picture view, right? So the big picture view is bullish, but as I mentioned in the previous few sessions as well, I'm not sure that if we have done the bottom over here and we are going to fly off, or is there a bit more pain and a shakeout left and then we will go higher. So so if this bit more pain that is left, in case if that is the case, then 26,000 will be breached on the downside, and that's why I'm taking that level as a very I'm taking that level seriously, and that will be like my cutoff point for the short term bullishness. Okay. Apart from that, yeah, metal is the one that continues to lead, and it is showing very promising signs as well. This one is very good. And in fact, in few days you'll end up getting the yearly close, and on yearly chart the metal index will be closing at the highest closing ever. So that will again be viewed very very positively. So yeah, so broadly this is how the market is placed at this point of time. Let me know if you'll have any questions or any query. I'll be happy to address it. So Checker Trader says that can you please tell me how to shortlist stocks for swing trading using top-down approach using RRG and then heat map? Sure. So see, you can have a choice between RRG and heat map. You can use either of them. I think heat map gives you a good idea about it. So let me show you how. Okay. Try to check two time frames. So let me take the specific indices, like 17 indices I see in that, basically there is no mid cap, large mid caps, and so on. Okay. So over here, in all these cases, you're seeing that the momentum is gaining. Excuse me. Hi. Now you see that FMCG is turning down, right? So FMCG, oil and gas, These will be the things where I'll be a little more skeptical. And as I told you, you have to try and see it in two time frames, because daily will give, I mean, daily RRG will sort of give you a view what is going to happen in the next 2 to 3 weeks. Okay. And 60-minute RRG might help you to understand what can happen in next 4, 5, 6, 7 trading sessions. Okay. So over here, like you see, now see, wherever there are some conflicts, then you need to see the chart. But in case you see over here, consumer durables is gaining momentum. Even on daily chart, consumer durable is gaining momentum. So that can be a near-term sector to watch out for. Then we have, then which one we have? We have IT that is gaining momentum. So reality over here, you can see that it is gaining strong momentum. I'm not sure how is it on daily chart. Reality also is gaining momentum. So again, this can be viewed positively. So amongst the sector, if I have to see, it is probably this consumer durable, which has, a good setup both on daily and hourly. So what I'll do is that over here, I'll go in scanner and I'll try to see which are the ones that are doing well in consumer durables. Okay. By the way, I'm actually surprised to see consumer durable over here. That is because there were few stocks that I saw was not looking that great. Amber, okay, Dixon, Kajaria. Kajaria is also down. I'm not sure what has led to this, but you see, I think this is Titan that is good. So over here also, when you are trying to find some stocks or spot some stocks, so what you need to do is try to find the setups where they are trading above the daily averages. Okay, because when that happens, that is where the strength is. In most of the stocks, you see that they are underperforming, right? The other thing, if you want to do a top down approach, then what you can do is that, say for example, Nifty index. Okay, now you would want to see that who are all the indices that have performed well from 11 December till 24 December. So what you will do is that you will go to the heat map, go to custom date, and from 11 December to 24 December. Okay. So in this case, metal small caps, uh, 50, small cap 50 to 50 PSE IT. So these are all your outperformers. Okay. So these are the ones, so especially everything that is above 50, above Nifty 50, these are the ones that have outperformed. But the extreme outperformers are the ones which is basically IT, commodities, and so on, right? So these are the places there where you might want to spot a trade on. Okay. So like I mentioned, you have to try and select a time frame, because swing had got oversold over here and many other things have got oversold over here simultaneously. That's why I took this low. You might want to take, if you want to take a little larger view, you can take from this low or this low and see who all have performed well. So it's your choice. Since I want to think who should be the performers in the very near term, so these are the ones. And similarly, who are the ones which are underperforming? So actually, it is bank, pharma, private bank, financial service. In fact, auto surprisingly, comes features in this list. FMCG, so anyways, is there. Then you see PSU banks. So I was talking about why PSU banks are looking a little weak, and see, this is the proof over here that we are seeing. So so having said that, these are the sectors where you can do look for a bullish ideas, and these are the sectors where you want to look at the bearish ideas. Below Nifty 50. Now, say for example, given that small cap has come in this, I think within small cap we might end up getting some good ideas. So let us see. So your question was, how do I filter it out, right? So what I'll do is that I'll try and filter out with new buys in small caps. So today I'm getting a list of 7 stocks. Okay. So over here, Chola Holding looks decent because it has crossed above the averages and it has given a bullish crossover. Gillette, meaningful correction, not that great. IFL, you can see IFL amongst whatever that we have seen so far as a very good chart. That is because it has been trending higher. RMI is back to the zero line and now it is turning around, right? NH, not that great. Tejas not that great because it is, very weak. In fact, now if I want to see if there are any weekly interesting setups, now mind you, weekly confirmations will get only by the weekend, but on Friday. But I'm just trying to see if there. Now see, Chola Holding even on daily, even on weekly chart, it appears to be good because it is consolidating around the 40 week, right? So Chola Holding both on daily, weekly looks good. Maybe if you want some confirmation, or in fact the confirmation has already come on the daily chart by closing above the averages. So yeah, I mean over here probably some low can be your pivot level, below which if it goes then it might weaken. There is the Jindal Saw J. What is this? JWL. I don't know. Okay. This is Jupiter Wagon. But again, this is below the averages. Laurus, not a good setup for us. But you can see NBCC now. Up move, consolidation happening, repeatedly taking support at 40 and now trying to turn around, right? So this is the way fact checker, you can actually try and find those stocks. Uh, so yeah, I mean, you can utilize this tomorrow's holiday to try to find more stocks. If you don't care about top down approach, then just simply select the entire basket and try to run on them and try to find a good setup. Because frankly, this is the type of market right now where a lot of stock specific is happening and not necessarily sector move that we are seeing. I mean, IT is the only one where we saw a bit of a sectorial move. Other than that, we did not really see a good sector move as such. It is more of stocks that are moving. So yeah, I mean, that is one of the approach. The only thing is that when you do top down approach, you're trying to eliminate further. Okay, but only problem in top down approach is that if at all cement stock comes and all those things come, then those are not captured very well in the list of indices that we have right now. So yeah, checker trader. I hope it answers your question. Akash says when VIX going up to normal range 12 to 14, is it possible Nifty trading in 1,000 range? So see, at some point of time, Akash, I feel that this narrow range that we are seeing, I mean, this is not sustainable because I can't imagine Nifty trading in this 100, 200, 300 point range. And 300 point range for Nifty right now is 1%, right? So I don't think that this will be the case. Maybe after once this holiday season, this Christmas season is complete and people are back to the desk, FIs are back to the desk, maybe we might end up getting those trending moves. So let's hope. But surely one thing is that I don't think these low wicks can sustain, nor this minor trend. I mean, this narrow trend that we are seeing can sustain. Possibly, I was thinking that what can make the wicks go higher, is it market correction, or it can also be that next month you'll start. I mean, people will start positioning themselves for budget as well, right? So maybe by mid of Jan or something, we might end up seeing wicks also shooting up a bit. And as we come closer to the budget, maybe that can help wicks go up. I don't know. I mean, I am not sure how wicks will go up without a market correction. Need to see. I mean, need to see how things unfold. And that is why, because of the lower wick especially, I am thinking that 26,000 is the level. That is my worst case scenario as of now. If it breaks below 26,000, then it's a risk. Then it's a definite risk. uh, Baburaj, please explain the strategy. So the strategy again will be, if there is a sell. So see, the exit strategy should be based on two things. Okay, I mean, one is that if your target has been hit, then you move out. Otherwise, your exit can be staggered as well, which means that on RMI sale, you book out one. And frankly, exit is very much dependent on market as well, because sometimes, see, I'll tell you how I, if I take a position, how do I exit? So it's based on two things. Either I feel that the market is not that good, so I might want to just book out, irrespective of what stock is doing, because I would believe that the stock may not be able to withstand if the market falls down. So that is one way I exit. The other way is that, naturally, I mean, if the target hits and if you feel that important resistance levels are now getting hit, you may want to book. But in these two cases, the thing is that you are not watching the stock specifically, and you're betting more on, I mean, in all these cases, there is a possibility that stock might still be an uptrend, right? So the ultimate reversal levels. So say, for example, even if I have to be bullish on Nifty, okay, say, assuming that I was long, my ultimate reversal level will be the 40-day, because something, when it starts trending higher on 40, okay, and it starts respecting it very well, if that breaks on the downside, that typically leads to a correction. You see over here there was an attempt to pull back, but after that it had given up. So a 40-day is kind of the last ultimate reversal level. And then a lot of it also depends on your time horizon, whether you want to tighten your reversal level to hourly, daily. I mean, those are all the choices that you need to make. So that is why, exit, there is no right answer to that. Entry, there is definitely a right answer to that. That is because you're defining your time horizon over there. Okay. So exit में वैसे भी हो सकता है कि if you want to keep a very tight reversal and you want to ride the trend, but at the same time be very vigilant, then maybe daily में आपने position लिया था, but you will keep the reversal levels on hourly or the stop loss on hourly. But if you are positional, then you might just want to stay with the daily. Just for example, I mean, just to give you a context, why I'm saying this is because you can see that silver has rallied so much, right? I mean, you see that from May of 2025, it has been respecting the 40 days so well. But in this case, okay, if you just measure the correction from high to low, okay, this was a 15% correction, sorry, 16% correction that we had seen. Okay, now if you ask me, okay, how would you exit, or what should you think? So it all depends on what your time horizon is. Okay, because maybe you would have entered and you would have rode this entire trend using 40. Okay, then this was a very big move in very short span of time. So maybe someone might want to tighten the reversal level and keep it to hourly averages, which is fair. Okay, some might say, okay, I don't care, I'm anyways in the money, so let it decisively break the 40-day and then I'll see, right? And this so far is not happening over here also. While silver is at 72 and the 40-day is at 58, so do I keep such a big stop loss? Do I remove it? It all depends on the market situation. So that's why there is no right answer to that, frankly. But I hope I have tried to give you some context of how to think about it. So yeah, I think it's 35 minutes now to the session, and I got three questions. Uh, s- okay, thanks, Baburaj. R. Singali, you know that Elite Wave is not this. I mean, we can't talk on this platform because not many people are well versed with this. Sorry, I can't take this question, and also it is more of a stock specific question. So I I would refrain from commenting on this. So sorry about that. So I think. Uh, I mean, actually, in a way, this was one session for. This session was for like how to find the stocks using top-down approach. So I spent quite some time explaining that. So I hope people find it helpful, and get your hands on strike. And I'm sure you'll end up getting a lot of data points or interesting setups through those scanners. So once again, merry Christmas in advance, and season greeting to everyone, and hope you have very good coming weekend, because it can be a good weekend if someone takes a Friday off. So So yeah, so wishing you that. And Baburaj says, when will you be bringing commodity data? Not at least in the near term. So it might take quite some time, because, as I told you, in near term there are many things that we are working on. So not the priority to bring commodity data in the near term. So once again, thanks a lot everyone for joining this session, and let's meet up on Friday at 5 p.m.